Welcome everybody. Welcome to our presentation webinar that we got going on. We wanted to do this to do an online presentation for everybody just to make it a lot more accessible. I'm out of the country right now. I'm in Phoenix, Arizona. We're doing a lot of real estate activities here as well. We're going to be discussing that later on in the segment also, because we got a lot of interesting things in the world of real estate and how impactful real estate has been in my life and how real estate can be impactful in your life. So what we're trying to do here is we're trying to give you guys value back. So we'll be doing a Q&A questionnaire at the end. So we're going to present everything to you guys, teach you guys from start to finish about how to build your $100 million portfolio in a very short time that we have in 1 hour. And we're going to do case studies on properties. We'll be looking at a lot of examples of live deals right now, analyzing them, seeing how to dissect those properties. We got a lot of experts on this panel as well. We have the entire team here, and these are the hand-selected guys. We got Brian, Abudi, Josh, Hardeep. These are the guys that are in it, thick and thin, every single day, seeing stuff on the field in today's marketplace, which is very important because you get to hear from experts and their opinions, and you get to form opinions of your own. So today's idea is just to have an open concept, have an open ears, have both of your ears open, and just hear us out in terms of what we think about the real estate market, real estate industry, what's happening, what's going to happen, what to buy, what not to buy, how to buy it, you name it. We're going to touch every single topic, start to bottom, and Q&A at the very end. Plus, on top of that, we're doing 2 giveaways. They're going to be major giveaways that we're going to be giving away that you guys are going to have an opportunity, since you guys are the exclusive people that joined our webinar, to earn and win those gifts. So without further ado, let's begin. Unlocking cash flowing homes. We are the Windsor's #1 real estate team in the entire Windsor area. I was in Toronto for a very long time. We've dominated that market for years and over a decade now, and we wanted to take our expertise and go into a different space. And the space that we kind of chose to go operate in that made sense for me and my family and for investing in Canada was the multifamily space, as much of you guys already know. We're a very dedicated team. We are focused on results. That's what we do. So at Armani Associates, we've won multiple awards every single year. We're at the top of the game, not because of what we do for ourselves. Well, it's because of what we can do for you and growing your portfolio from someone that's a beginner, that's never invested in real estate, to someone that has over 200, 300 units. We work with clientele from all different ranges. We work from clients that are just beginning their investment journey and how to actually set them up properly from the very beginning, which I think is a lot easier to learn, because if you're someone that's just learning something, you guys haven't learned the bad habits yet. So it's a lot easier to show you how to actually set yourself up from the very start to get to where you need to in a very short period of time, because I've done that for many, many people. A lot of the clients here in Windsor, Ontario, and Toronto, a lot of out-of-town investors, they invest with us because of the systems, because of the track record that we have of success and the name that we have in the industry. And that is one of the main reasons why we are very successful, is because we actually make sure that we tailor make everyone's plan, because everyone has different situations, everyone has different unique criterias, and how we actually analyze what your criteria is and how to get you to where you need to go, that can actually help you fund your lifestyle, to give you the freedom that you need to get from point A to point Z, is literally the main reason why we are successful. And that's the reason why we get back. The next slide, Sunny. I live by myself. There's this guy right there with a really weird looking smile there. I don't know why Sunny chose that picture, but I still like it. By myself, I've been a seasoned investor. I have over 400 doors in Windsor and in Canada alone. We are investing into the US markets now as well, and expanding our horizons into the multifamily space here. We deal with everything from pre-construction to multifamily to commercial spaces, and I have an experience in all of those things for many years, because I've dealt with clients that are worth $150, $200 million as well, and we've catered and curated their programs. And I've kind of learned a lot from being in the industry by actually doing things myself. A lot of realtors cannot say that, and that's one of the things that I have a very proud saying on, is I've taken a lot of risk in my life, and because of those things, we're able to do things for you by fine-tuning the risk that I had to take, so you guys don't have to take that risk. And we built a team with years of experience together to help you guys get to the goal of what we're trying to accomplish. So just for numbers for our team, just in our team alone, we've sold over $1 million in real estate across Canada. We're more closer to the $2 billion mark, but $1 billion in real estate sold alone is a lot of properties sold and transacted from either buyers or sellers. And that's something that we're very proud of because we have a great name in the industry, like I mentioned, and it's because of people like yourself that trust us. We have over 2,500 doors that we have as a team, as a collective right now that we manage, operate, and we build out for people as well. Also, our social media presence, which we're very, very proud of because we are the social media experts. Our marketing stands up for itself. A lot of you probably have seen our social media marketing on Armani Associates, on Abuti's page, on Brian's page, on Hardeep's page, on Josh's page. And we try to do content that's relevant today so people can actually relate with us. We're more approachable, and our sense of style is we are who we are, and we are like the 300. We are the people that stand true to what we know, and we will always give you the real value of what we can provide. We will not try to upsell you on anything that doesn't make sense for you just for our own benefit. We don't need that. We want long-term relationships that we can nurture and grow over time together, because the more richer that you guys get and the more richer that we make you, indeed, we will get richer in return. So that's our whole philosophy here, is to provide value and give you guys value and to build you guys up to where you guys need to be. And then we build with you for the long term, not for the short term. So those are some of our numbers across social media as well. Now, the power behind the success. We have two of the biggest gunners, is what I say, in our team. We have Josh Alice and Abuti Hijazi. They have been doing exceptionally well in the real estate industry. The reason why is because they are also movers and shakers in the industry that are leading the industry with being genuine, having integrity, and actually having knowledge to provide to their clientele. They are the top producers at our firm, and they are trusted investors and people that are doing investments themselves. So they actually show people how to actually dissect numbers, how to actually go through what contracts to look at, what properties to look at, how to actually find a deal. And we're very proud to have Josh and Abuti here. So if Josh and Abuti can please turn your mics on and just introduce yourselves, I would love to give you guys the floor at this time.
What's going on, everyone? We're happy to have you guys here. I've been in real estate for about 4 years now, but I joined Armani about 2 years ago. And it speaks for itself, right? I've been able to have him mentor me and, teach me the ropes of the game. So I'm able to bring that to my clients and everyone that kind of asked me about real estate as well. So it's been a big push. And we love what we do, and we're very happy to be here. So enjoy the rest of this presentation, but I'll let Josh speak as well.
What is going on, guys? And my name is Josh. I've been in the real estate game for a number of years now. I'm currently at actually one of my own properties. I have a short-term rental in Amherstburg, which is just outside of Windsor. So anybody in the short-term rental space, this is a good area for this as well. But like Armani said, we are actively investing in this market. We're not people that are just sitting by and helping people purchase properties that don't make any sense. We are actually in the thick and thin with you guys, and we're doing this ourselves also, right? So these are the type of people that you want to align yourself with and work with, because you can go to any realtor that's going to show you some property that he has listed that he has no idea about and has never purchased a property himself. Let me ask you something. Would you ever purchase a property from somebody that's never purchased one themselves? Right? The logic doesn't make sense, right? So work with people that know what they're doing, work with the people that are already in this space, and you will succeed a lot more than you would with without people like us. But yeah, good to have you guys here, and we look forward to teaching you guys a lot about real estate.
Thank you, Josh. Thanks, Abuti. Really proud of you guys because of what you guys do. But before that, I also want to introduce Brian. Brian is a new realtor that has been in and around the real estate space, and we're so excited to have him also because he brings a whole different wealth of knowledge from actually the previous businesses that he was a part of. So he meets a lot of real estate investors every single day, and he's been a part of that industry where he meets a lot of people that are involved in the real estate space, and we're very lucky to have him as well. Brian, if you can say a few words, that'd be awesome.
Yeah, no worries. My name is Brian. Obviously Armani was calling those two guys a gunner, and I couldn't agree more. I'd probably call myself more of a young stallion, if anything. I'm learning a lot from this group as well. And like Josh said, it's really important to sort of surround yourself with the people that you want to be yourself and who you want to learn from. And that's sort of the benefit that I've had this very short time I've been in here, and it's been nothing but great. These guys are definitely people that do not just say, they get things done. They'll follow through with exactly what they promise. And even just being here today for everyone showing up is a huge thing in itself. I'm here to learn just like you are, and I'm sure there's much to learn going forward for today.
Thanks, Brian. You're absolutely correct. And learning is the part of the game that, we need to evolve constantly. Also, on top of that, I want to go back to Josh's point in terms of people that are doing specific things. So if you guys are into, let's just say, buy and hold strategies, that's something I can discuss. Every single person that's a part of this team invests into a different form of real estate, and they're experts in a different form of real estate. Like Josh does a lot of flips, right? A lot of Airbnb. So if you guys have short-term rental questions, he'll be more poised for that. Abudi is really, really good with finding off-market deals that are also duplexes, triplexes, fourplexes, and setting up the clients to actually start building their portfolio from the very beginning, and to getting permits to make that into like 2-unit building into a 4-unit dwelling. So it depends on what you guys are looking for. And for multifamily space and pre-construction, you guys already know, just ask me. I can also chip in and give you guys more value in terms of what I'm doing, so you guys can ask me questions about my real estate portfolio and things of that nature. So that's the whole idea of this presentation. And without further ado, let's begin and talk about the first topic that we're going to discuss today, which is, what is a cash flowing property and why is it relevant for you?
Gotcha. I'll take this one, Armani. So, as agents, whenever we're helping our clients, we like to get them invested in something that we'd buy ourselves. We don't just tell them to buy whatever and let them go and be. Being in Windsor is actually a beautiful thing because we're the cash flow capital of Canada. We always say this. Windsor is still one of the most affordable cities to buy real estate in, which allows you guys as buyers to have that cash flow on a property. What is cash flow? Cash flow is the money that you have left over after all expenses are paid on that property per month. So you got your mortgage expense, your taxes, your insurance, utilities, and whatever unexpected costs are there. That's just the money you have left over coming in from your rental income. So it speaks for itself. That's what cash flow is. And most of our I'd say all of our properties are cash flowing, because that is one of the main features that we make sure that it has, especially for our clients. Even at 5% down, it's very possible. I just had some guys buy a duplex from me for 5% down. They're cash flowing like $600 a month, which is insane. So that's cash flow. Cash flow, one property will not make you rich, but if you have enough properties cash flowing, that is where the wealth comes from. And that's basically what it is.
So that's a great point, Abudi. Let's just talk about those clients, for example, that actually you got them a property for 5% down. Just so people don't know, 5% down for that was, I think, $20,000 is what they had as a down payment. And they didn't have much money to work with, but they were just starting their investment journey. And he got them a property with $20,000 down. That is making them $600 a month for the rest of their lives. And that is something that can substitute and grow for them so fast to actually accelerate the next property, and that can substitute their lifestyle expenses. So if people want to buy a car, you have to think of it backwards. You got to buy something that can cash flow that amount of money that you need to buy that bad liability. And if you guys work with that strategy every single time, now you guys have different properties paying for all your liabilities, which makes so much sense. And why wouldn't you want to do that? Because you can't keep working forever. So you have to make sure that you set up yourself and plant enough seeds. So Booty, let's talk about that deal for 2 seconds.
Yep. So the deal Armani is talking about, I knew the agent very well. I was working with him on a few deals, and then this one came up, and I saw it's been up for a very long time. We had some motivated sellers here. And for those that don't know, Windsor has a lot of multifamily, but it's older. But they got good bones, solid. So in terms of like duplex, triplex, we got a lot of those. As you guys might not know right now, the market's a little slower, which is good for us as buyers. So I had these clients and I told them, yo, listen, we got a deal. You guys got to jump on right now. $20K they had to get their down payment in. This is actually their second property. And right away they listened, they jumped on the deal. We got it done literally a week, closed in a month, and that was good to go. But for just to let you guys on some insider information for this one, we got a really good deal. It was in the low 400s for a solid legal duplex. Both units were getting close to $2K in rent, which is unreal. So that is where the cash flow comes from there. Not all deals are as sweet as that, but we do have a lot of off-market ones that come pretty close to that. So that's kind of where we're at with that one, guys. So you can go next slide. Yeah.
That was a really, really good deal.
Mm-hmm.
Okay, so how do we identify high cash flowing properties? We analyze local rental markets. Not only are we, especially in Windsor, but in the GTA as well, we are actively investing in these markets. So it's not like we're just looking at realtor.com and seeing what everything is being leased for. We know this because we are actively renting out our own personal units in these different markets as well, right? So that is one of the big things that we look for when we are looking for multifamily properties for our clients, as well as for ourselves. We also focus on legal duplexes, triplexes, and value add units. Value added meaning where there's potential to increase rent or to renovate a property to increase your rent that way, and then you can refi your money out as well. Making sure that you vet your tenants properly and mitigating as much risk as possible. We use websites like Single Key. There's other ones out there that we use as well, but these websites actually will go and do a background check on the tenants that you're potentially putting into your units, and they can check their credit score, their if they have had any issues with landlord tenant board as well. These are the certain things that most other realtors and leasing agents don't actually do for you. And they don't do this because they don't understand what it's like to actually have tenants. So working with people like us that actually have units and have rental properties is very important because they don't understand these aspects when it comes to taking care of your assets, which you pay a lot of money for, right? And if you have a rental property that is, you have trouble tenants and because you didn't vet them properly, they're not paying the rent. That's especially if you only have a duplex or a triplex, right? You don't have as much income to mitigate, not having income come in every single month. We also have cash flow calculators as well that we can provide to anybody that's looking to potentially buy a property and wants to analyze numbers themselves. Definitely put them in, yourself, and then have us take a look at it, and we can make sure everything is run properly. But we do have those as well. Checking zoning, ADU, and potential renovation upside. Like I said, trying to add value in terms of renovations by doing strategic renovations in order to bump up your rent. Trying to spend the least amount of money possible, but spending it in the right ways, right? Adding, is there room to add more bedrooms? Updating your kitchen. Don't have to go crazy, but it also depends on the rental market that you're in. You're not going to put granite and high-end kitchens into a student rental, right? You have to be wise about your renovations and understand the market that you're in as well. And that's where we can help you guys with that also. And then, negotiating below market, off market properties. Abudi is amazing at this. He is, an off market king, and as you would say, for our team, making sure that you're not competing with other people on the market and finding these deals that nobody else has access to. And that's what we provide.
Exactly. Thanks for that, Josh. And that's pretty much the main reason why we invest into real estate, is because we want to make sure there's enough cash left over for the things that we cannot calculate for, because you can't keep paying for those properties, especially if you're living in the GTA. It's already hard enough buying a good rental property there is, because wherever you put your money, you're going to lose money one way or another on rent, because the mortgage is not being met, and then you're putting money out of your pocket every month, and you're still calling it an investment. That's not an investment. That's a liability. Just get a girlfriend instead. It does the same effect. So what I would say is buy some cash flowing properties in Windsor where you guys have some money left over every single month. So in case your tenant doesn't pay you, that's why you're buying multifamily units. Because let's just say if you have 10 units, one tenant doesn't pay you, you can still survive. If the interest rates go up, your cash flow goes down, but you still have something coming in at the end of every single month. So it's very important to look at the metric of cash flow. And if your property's not cash flowing, don't touch it. Wait for the next one, right? Unless you find a really, really good deal that can be a flip property that you can build a lot of money with. So let's just say if you have a limited amount of money, you can work with Josh, find a property that's worth $500K that you can get for $350, and then renovate it by spending $50,000 of line of credit money or money that you can raise from people around you, and then make a $100,000 profit. And that $100K profit can now pay for your next property. That could cash flow. So it's very important to look at those metrics. The next slide, this is for Buddy, do you want to take this one over?
Oh, I'll take this one for sure. I'll take this one. Yeah. So the reason I'll take this one is because I've had the benefit of sort of having most of growing up in Windsor here, and so I've have two versions of it. I have just the growing up part, but once you become a realtor, you really start to notice the fine details of what's happening in the real estate around you. And so why Windsor is a cash flowing hotspot. So point number one that's already been touched on, extremely rental friendly, extremely rental generous. Housing costs, as you see here, 30 to 50% lower than the GTA on average. And since those housing costs are so low, you tend to see more opportunity in affordable multifamily investing. And that's what everyone was just touching on there. I know, even Armani at one point was a Toronto boy and ended up coming here to Windsor because of this opportunity, because there was such an opportunity to be here. You're seeing duplexes, triplexes, even up to like fiveplexes going for the price of average residential properties in the nearby cities. I'm pretty sure there's even the one with Armani in Wellington going for under 900. And it's nuts. You don't see that anywhere else except Windsor. And then you also have to keep in mind, with the tendencies around you, the University of Windsor is one of the largest universities for international students, which is another main driver for the low vacancies that we see here. Another main point to keep in mind is the growth outlook of Windsor. One of the main indicators that you're investing, or you're at least making a smart investment in real estate, is to look at the city's growth in general. And when you look at Windsor, I actually had to look up this fact. But when you look at the construction developments happening in the area, Windsor is actually seeing a 548% jump in constructions of new homes. And that's dating back to just last June, which signifies a confidence in sustained demand here. People aren't going to build shit here if they aren't confident that it's going to remain and stand intact for the time to come. And then another big thing in terms of relating it to the construction and development point, if you're not from here, the Gordie Howe Bridge is set to be open in September of 25 this year. The battery plant on Banwell is being just finished up. I've seen that building being built since a few years ago now. It looks like it's almost done at this point. And one more thing is the Detroit effect, which again, you'll probably know that if you live here. But we have the largest international border with trade between us and the US. You see about a quarter of all that international trade happening on that one Ambassador Bridge. And that's, again, not including the one that's just about to be finished up now. It's a 10-minute drive through the tunnel or the bridge if you decide to work in the States, in Detroit there, which has huge opportunities there as well. There's a ton of medical workers that do that every single day. So there's a ton of opportunities, a ton of, green flags as to why it's a hot spot to invest here. So just sort of summing it all up, it hits all those green flags for investor. It's extremely affordable. It yields solid rental incomes. It has great long-term growth outlook. And so even if you're not from here, the facts sort of speak from itself. You can look, the facts or stay there. You can sort of make a calculated decision if you decide to invest here.
Great points, Brian. And the main thing is you want to make sure that the city that you're investing in has some growth. If there's no growth in the city, what is the point of investing into that city? You know what I mean? You can buy the nicest duplex in Idaho, right? But who's investing in Idaho right now for multifamily, right? I don't hear about Idaho for multifamily. Windsor is on the top of the name for real estate multifamily investing. And I see a lot of people in Canada investing in Edmonton, Calgary, and things of that nature because of affordability. But what growth is coming into those areas? Limited. And that's something that I had an opportunity to work with developers to sell those areas. I refused. The reason why I refused was because I don't think it made a lot of sense. And if it doesn't make sense for the future growth and future outlook of a city, you're a microeconomic factor in a macroeconomics place, right? So you want to go wherever the macroeconomics make sense. And speaking about macroeconomics, we're going to talk about the new developments coming to Windsor. So Brian, if you want to take that over.
Sorry, say that one more time. Are we talking about
the new developments coming to Windsor?
Oh yeah.
One of you guys want to speak on that?
Are we just talking about the bridge and the battery plant right now?
Yeah.
Yeah. So I was just saying that before too. Like that bridge is set to be done in September of 2025. So you figure that's just going to drive in a little bit more traffic here. And then that battery plant, like that's been going on for a couple of years now, but I drive by it almost every single day and it looks like it's almost done now. So that's going to be a huge place for, I think it's like as big as Chrysler or Stellantis, whatever you want to call it now. And that's going to be a huge indicator for people coming here for employment and whatnot.
Yeah, like Armani said, like you'll touch on later with our Hamilton project, you got to follow where the big money goes. And Windsor, they're planting a seed right now, and you have the opportunity to get in before that seed grows. There's hundreds of billions of dollars being poured into this city. I grew up here as well, like Brian, and I'm telling you, it's 10 times busier than it was before. We're seeing the growth rapidly. And even with this EV battery plant, it's the largest in North America. The bridge, there's $140 billion annually that goes through. imagine what that's going to be like with the third port of entry coming. So it's just massive growth here. And if you're not seeing it, you're missing out. I mean, you can go find cheaper deals, but there's no growth behind that to back your investment. So
Yeah, I definitely feel the difference. Like I've lived in Windsor now for 3 years, and from the time that I even came to Windsor, and even people that I speak to in Windsor, now they see the difference in the traffic and the amount of people that have actually come there. The influx of tenants that are coming in all the properties. Now we're getting more professional tenants, people that are making over $150,000, $200,000 a year, engineers, professional trades that have to live here for over a decade, and plus people that are hired by the Next Star Energy plant. It is absolutely massive. So it's wild to see the development of the city. And with the development of the city, if you guys are a part of the city in any which way by investing into the city, you will make money in the long run. Guaranteed, no question asked. You can literally do this and spend money on something and still be okay within 10 to 15 years. And that's the whole idea of this. But if you guys can fine tune what you're buying and open your eyes and find people that can actually identify opportunities for you to work with the realtors free. So we can literally do this for you for free and set you up to a point where you don't even have to second guess. There's no second guessing involved. It's guaranteed results every single time because we're doing it for ourselves. We can do it for you. So this is a very important slide as well, because what you're about to see now is you're about to see real live investments that you guys can purchase right now and how we're going to dissect them. So we chose and handpicked a couple of properties that we think are really, really good deals in today's market. They will be sold by this week or another, I think 1 to 2 weeks tops, these ones, just because they make sense, the numbers make sense. And we're going to break down the cost of what it costs to buy them, what it costs to own such a thing, how do you run the cash flow and ROI numbers, and what's the upside potential in terms of what you can flip this property for, and why are we actually looking at this property instead of some other property. So we're going to be doing those properties and case studies starting now.
all right, guys, so I'll take this one. This is a deal that I've been working on. It's actually our client who's selling this off market. Well, now it's on market, but it's a legal 2-story side-by-side duplex, 2 bedrooms in each unit. It's very beautiful, renovated turnkey. Each unit has 1 bedroom or bathroom, and then the 2 bedrooms. And this place is in a prime location in the heart of Walkerville. For those that aren't familiar, it's close by to all amenities, the best eateries in Windsor. It's literally a prime location. Everything is centrally located there. And it's rich in Windsor's history as well. So that is a spot that you'll never have issues getting high rent because of how prime it is. Now, in terms of the duplex, let me look at the numbers on the screen. So we set a $525K purchase price. If you guys are nice to us, we can probably get that down to 500. So let me base my numbers off of that. So for 5% down, I like to say 5 because a lot of people think you need hundreds of thousands to get into real estate. You don't. You just need like 25K and then you can get into something cash flowing right off the jump. So at 5% down on a 500K purchase price, all you need is 25K down. That's it. That's your down payment. And then for those that know, you have the CMHC premium that you have to pay as well if you're not putting the full 20%, but I'll get into that later. So to break numbers down a little bit, your principal and interest there per month on that 5% is going to be around $2,200 a month. So this unit, both of them are actually getting rental income as is, but there's room for potential growth. But today, the one unit's getting $1,600 plus utilities, and the other one's $1,500 all inclusive. So $3,100 in total income, which is not bad at all, but there's room for growth that I'll talk about in a little bit. So with that all-inclusive unit, let's say utilities are around $200 a month, insurance for the property is around $200, and property tax is around $170. So all in, with this 5% down, you're at $2,800 around there roughly per month with all expenses in. So with the $3,100 you're getting, you're cash flowing around $250, which is freaking amazing on a 5% down play. Obviously, the price is gonna, like, your cash flow will differ and go down a bit on a 20% down play, but at 5%, that's not bad at all. With the room for growth that I was talking about, these units in this area, as nice as they are and as large as they are, can easily get around $1,700 a month plus all utilities. So you're taking away that all-inclusive unit, you're up in the rents. There's about $500 extra in cash flow missing from this investment, but it's not bad as is. You can leave it for now. And that is the numbers on a 5% down play. Obviously, at 20% down, I ran the numbers. Your principal and interest is at around $1,900. Your total expenses, when you add everything, is around $2,500. So then you're already at that $600 cash flow per month on 20%. If you do what I said and you get the potential to add more, you're over $1,000 easily, which is amazing, not bad at all. And then the resale value for this is always going to grow because it's actually not a bad price of $500K. These are easily worth over 600 in a good market, but that is our numbers for this one. I do really like this place and I want to talk more about it later, but Armani, I think I'm good with that one for now.
Yeah, that's a solid property. Thanks for thanks for sharing that. I believe the numbers make a lot of sense. 5% down, I mean, doesn't mean like you can't buy much. And like in cities, like you get 2 units. And the main thing I want to highlight here is to find a duplex. People can find duplexes that are either up and down. So meaning there's a unit on the bottom and a unit on top. That's usually like one house divided up in 2 portions, right? So you have someone who lives on the main floor and someone lives on the second floor. They have separate entrances and separate exits. That's what makes it a legal duplex or legal 2-unit dwelling. This is a side by side, meaning that both sides have a second floor and a main floor. So they have 2 different floors, which is really rare in Windsor as it is. And side by side duplexes go for a lot more money. And I think at 525 to 500,000, this makes a lot of sense for sure.
It's insane. And I did mention also that this one is legal and it's separately metered, which is perfect for investors because sometimes we buy units that aren't separately metered. So you have to differentiate that by yourself and have the tenants separate that. So it's a little bit of a headache, but when they're separately metered, they just set up their own utility accounts and they pay straight to the utility provider, which is less of a headache for you guys as well. So this one checks all the boxes, if I'm being honest, A+ all around.
Yes, it does. Let's go to property number 2. This property, we're going to give this to Josh. Josh, let's talk about this property real quick. This is a big boy. This is a 7-unit building in Windsor on Wellington Avenue. And this one, the cash flow, if you guys are looking for cash flow, this is where the numbers are going to blow your socks off. So Josh, take it over.
Yeah. So this is one that I actually have listed at the moment. This is as Armani said, a 7-unit building. It's actually the building right in front is a 6-unit with potential for a 7th, but it also has a detached home in the back as well, making this 7 units as is, but with the potential to make another unit, which would, obviously increase your cash flow as well. The nice thing about this property is that you're getting 5 units already vacant, right? So you have 5 units where you can set you can set market rents or do whatever renovations you need to do in order to bring it up to market rents, and then you can rent it out that way. This is very close to the University of Windsor, so having this rented should not be an issue because we have students everywhere around this area that are looking for rentals. Now, your monthly mortgage on a property like this, keep in mind you do have to put about 30% down on a property like this because you are going to be required to have a commercial mortgage on this property. Anything above 4 units is going to require a commercial mortgage. Taxes on this property are actually extremely cheap, especially for a multi-unit just like this one. This is only $292 a month, which is extremely cheap. Utilities, roughly about $1,000 a month. Insurance, you can factor about $330 a month. Maintenance, which is your property management fee of about 5%, is going to be $560 a month. Your total monthly expenses, including your mortgage, is going to be just under $6,000 a month. Now, we do have currently 2 units that are rented, one for $875 and one for $1,200 a month, but these are under rented. Plus, you don't have any other unit rented as well. Your projected gross rental income for this property is $10,000, which is huge for a property like this, especially if your mortgage is only $3,000 a month. Like, take that in. You have $6,000 in monthly expenses, including your mortgage. You are left with $4,000 a month to yourself to do with whatever you please. Go buy that luxury vehicle that you've always wanted, or help, pay down your mortgage. But the other good thing about this is this would be a complete BRRRR as well. If you don't know what a BRRRR is, it is buy, renovate or rehab, rent out, refinance, and then you repeat. the good thing about this is you can basically pull every single dollar that you put into this property out on a cash out refi. The refi on a 4% capitalization rate is 1.35 million. So you're pulling out around 400,000, given your down payment on this property just under 300,000, and then let's say you put $100,000 in renovations into this property, you are pulling every single dollar out, which means you can go ahead and go buy another one as soon as you're done with this property and keep continuing the cycle. That is how you buy endless amounts of real estate, with only using the cash that you have. Especially if you have, you know, in excess of $400,000 or $500,000, you can very easily rinse and repeat that 500,000, pull it out tax free on a cash out refi, and build a portfolio extremely quickly.
That's exactly it. And Josh, that's exactly how I built my portfolio. So we're going to talk about the pillars of how to build a $100 million portfolio. And that is actually an excellent strategy of how you actually make that happen. You find properties like that where there's a lot of gain to be made in a very short amount of time. Another thing that people don't know about commercial properties and why I love them so much, eventually if you started buying duplexes, triplexes, fourplexes, you need to learn the game. So you have to buy those first if you're beginning. But if you have a little bit of money, or if you have more of a risk profile that you can take more risk, I would definitely encourage you guys to look into the commercial property. If you can raise money, if you have enough money to buy commercial, start with commercial. Reason why? That's the way that you actually build wealth really fast, because you can refinance your money right away. And people don't know that commercial properties do not go on your tax bureau. Meaning, if you run up your Equifax, if you run your credit report, any debt that you take on residential properties will reflect on your Equifax, will reflect on your credit report as debt that you own. With commercial properties, there's no such thing. You can have $400 million in debt, but when they run your name, they will have $0 in debt showed. And that is a magical component when it comes to commercial properties and why I love them so much. And also the approach of how you can refinance them just with the rents that they generate. So like Josh was saying, it generates, there's 2 units rented right now, 1,200 and 800, so $2,000 total. But if you rent all the other units that are vacant, number one, they're vacant, so you can set your own rents. You can literally take that and refinance it right after you get it to $10,000 number per month. That's $120,000 a year. The bank will give you $300,000, $400,000 just because you're making that much rent already, and they're rewarding you because they're saying, oh, the property makes surplus of cash. Let's give you a refi on this because it can sustain itself, and we can refi the money out of that. Now you have $300,000, $400,000 to play with. That's tax-free money. On top of all of that, you still own the asset that's giving you cash flow every single month. And that's pretty much the biggest loophole that was ever generated and created in the Canadian tax code and the US tax code for us to benefit from. Okay, so we're going to talk about a couple of the pillars that are very important to you making a $100 million portfolio. And the number one thing that I always talk about is systems. Systems are the most important things when it comes to your life, my life, and anything that we do. So if you don't have any systems, you're not successful in whatever you do. You can be a business owner of any which sort. You can be a contractor. You can be a lawyer. You can be a doctor. You have to have systems in place to be successful. So it's very important to nail down your systems, because that is what guarantees success over and over and over and over again. And we have literally foolproofed our systems to a point where once you guys come on board, and if you guys want help with buying and acquiring a property, or you need guidance on what to buy, how to buy it, we will set you up with the best systems that we have. We have the best mortgage personnel you can think about. You know, we have the best lawyers we deal with on a regular, every single day basis. You want financing through different lenders. We work with all lenders to find you the best and lowest interest rate, and we know exactly where to take what deal that's going to make the most sense for us to get the lowest financing costs that can give you more money in your pocket. We have that experience. We have the best property managers, people that can manage your properties for you. So if you're out of town, you could be like me, you can be in Arizona right now, and all your portfolio is being managed by somebody else. You pay them a little fee, 4 to 5%, 6% to manage your properties. But those are systems that enable you to live the life that you need while being a real estate investor, because you want to be free. You don't want to be having another job of buying another property. You're buying that property to get away from the job and the life that you currently have, so you can be free. And that's the whole idea of that. And that's number one. Number two is to expand your knowledge base. So staying stagnant is the fastest way to fall behind. We will dive into this, with consistently leveling up, from learning the ins and outs of various asset classes, when it's a good time to exit out of the residential space, when is it a good time to enter the commercial space. Right now, the market's slow. Everyone's talking about the market being slow. People are scared. This is a perfect opportunity. People were waiting for a storm to get inside to real estate investing. This is the time, and people always talk about the perfect opportunity, the perfect time. It doesn't exist. The perfect time is when you're making a decision to buy a property that can pay you every single month that makes sense in any market. And that's the perfect opportunity. So we can analyze those for you. We can find them for you, so you don't have to second guess and figure out where to go for that stuff. And the act of doing, same thing. It comes from actually executing on your moods, executing on things that we see. Like we just showed you guys 2 properties that can make sense for you. If you have 5%, you can buy the first property. If you have 30% down, if you have $100,000, $200,000, you can buy the other property. Or if you don't have a lot of money right now, you can get into a complete different investment strategy, which is pre-construction. People in pre-construction right now, you couldn't line up a year ago and say, here, I wanted to get an opportunity for pre-construction. And pre-construction right now makes a lot of sense because of one reason. And we're going to go to that slide next. So if you can go to the next slide. Pre-construction. The reason why people buy pre-construction is only for one reason, is because they want to actually get the future capitalization and growth by putting little money away every single month over a duration of 1 to 4 years. Just have like a savings bank account to give them the time to get the funds ready to still be invested into real estate in one way or another. And we have a perfect opportunity for you that we're going to be discussing, and it's about a pre-con condo that you can buy for the low 400,000s that's going to be built in 2029, 2030. And you only need $25,000 or $30,000 to do that. So let's talk about that. Somebody wants to take over the slide.
So this is a condo development that we are currently working on in the Hamilton area, starting at the low 400s. This property, the common areas are fully furnished by Louis Vuitton. So this developer is actually partnered with Louis Vuitton, one of the only developments in all of Toronto and the GTA where you have such a iconic luxury brand that has actually decided to work with a condo developer. So this is a very exclusive to to this developer, where you're only going to find somebody like Louis Vuitton that's going to be working with a condo development. This is located just minutes from the GO station, which is going to get students to McMaster, Mohawk College, and other major highways within minutes, right? And one of the biggest issues with Hamilton right now is vacancy. There's, I think, 60,000 plus students between McMaster and Mohawk College. There's only about 3,000 beds to service these 60,000 students. So they're traveling from far away because they don't have access to accommodations close to these 2 schools, which is why the government is actually dumping so much money into the city of Hamilton right now. Over $4 billion in development is being dumped into the city, which is, we think Windsor is a big investment hub because of the amount of investments being dumped into Windsor with the Gordie Howe Bridge and the Stellantis battery plant. $4 billion is, I think, one of the biggest investments in any city in all of Canada at this point. And to get into a project like this, you only need $30,000 to start for the next 2 years. And with your $30,000, the developer is actually going to pay you 10% interest on your money until closing of this property, which is why basically me and everybody on the team purchased condos in this development, because it's a no-brainer. Where else are you going to get 10% on your money? If it's sitting in the bank or sitting in a RSP, you're basically losing to inflation every single year, right? So why not put into an asset or into an investment that is going to pay you 10% annually, but also at the end of the investment period, you have an asset that you're going to own at the end of the day, which is going to now turn into a rental where you're going to collect active income. And, with this closing in, I believe, 2028, 2029, the condo market in the GTA is definitely down, which is why we're getting incentives like this to purchase these properties. But not only that, the pricing of these properties are extremely low, right? The other issue with the condo market in the GTA is that we're going to have a lot of these closings that aren't going to actually make it to closing because these developers cannot afford to, or people cannot afford to close, right? So in 3-4 years time, when we have all these developments that we're supposed to close, not close, and we still have tons of people coming into the country and immigrating here, we're going to have a big shortage of condos and rental places when we have a developer like this, where they have not canceled on any of their developments. They're committing, and they're actually closing on all their developments. These are one of the only developers in all the GTA that's actually being able to close on their condos. This is going to be one of the ones that's, you know, the valuations of these are going to skyrocket come closing time, right? So that's, you're getting appreciation, you're going to have cash flow at the end of the day, which is going to be tough to find in the GTA, and this is why we picked this specific project to work on.
Yeah, great point, Josh. And we're all investors into the Hamilton market because it's very similar to Windsor in that way. And another reason it's very close to GTA. So, you know, being closer to Niagara, being like the mix of what makes a successful city is future growth, a lot of infrastructure changes. There's a train coming there directly to downtown. There's the transit. Score there is going to be 100 out of 100, which is insane. So people from Toronto are not going to be to Hamilton because it can buy quite right. On top of that, people that want to do universities, McMaster has a huge infrastructure change coming, but the universities are slow to say that they're going to be there for years to come. So the university sounds love them because they make a lot of sense. Plus, it's a set and forget strategy. You put 5% down, and you just forget about it. Okay, can you guys hear me?
Yeah, it's your thing's good.
Yeah. Can you guys hear me? Okay, awesome.
Yeah.
So the main thing is thanks guys. So the main thing is just set it and forget a strategy, right? You just want to take the $30,000 and I'm planting a seed in Hamilton because I know that one point in time, $30,000, I can't buy much with it. I don't have to get a mortgage today. I need to get up my reserves. I can blow them up.
Ronnie, it's cutting out a little bit. You guys, can everyone still hear?
Can you hear me now?
Oh, yeah.
It's a lot better.
Yeah.
Yeah, you're joined back now.
Just cut out a little bit.
Sorry. The it's 112 degrees outside here today. So my Wi-Fi router probably burnt down in South Arizona. You know, so just like the heat that I'm staying in Arizona, we're bringing some fire to you guys with the investment opportunities that you guys have, and that's something I want you guys to look at. So Hamilton, don't sleep on it. There's 85 plus units coming there, 85 plus towers, buildings. If you guys think about Square One, you think about downtown Toronto, this is going to be just like that. Just buildings on buildings. The entire downtown is going to be revitalized to a point where you guys won't recognize Hamilton anymore. The amount of restaurants, food places, like high-rise buildings are coming up there. They're already pre-approved. It's not that they're future hope to build it. It's already funded, approved, ready to go. It's being built. And the idea to buy something like this is you want to buy something in the first phase possible. Because when the other builders start building, they keep jacking up the prices. That's just how it's been in the entire decade that I've been in real estate. So you don't have to really research too much. All you got to do is just think smart, right? You want to be the first at something, the first one, because they think the first one's taking the most risk. It's risk-free. For me, actually, I think about it the opposite way, and that's the reason why we do really well in markets like this. You buy it first. When other developers build a concept, now it's built, everybody wants to be a part of that project now. After, in 2029, everyone's going to talk about this building, and they're not going to be able to buy it because all the other buildings are going to be at $550,000. They're going to be at $600,000 by that time. And you bought it for $400,000, and it's a very Miami-based, like looking type of building where it's going to be top of the line. Like this developer is really, really good for what they do. To give you 10% on your money, think about how confident they have to be in their product. To give you guaranteed 10% on your money on $30,000, that's better than the S&P 500. That's better than you investing your money in stocks. That's better than you investing your money in Bitcoin, because it's guaranteed. Right? So you can't find a lot of guarantees anywhere. This is one of them. It's a unicorn property. That's why we like it. This is why this investment makes sense, because of those reasons.
Yeah, it's insane. And to compare that to even like Toronto's market, where people talk about the construction, the condos there, Hamilton, like when we went for the presentation, we saw a lot of data and statistics. In Toronto, you're paying roughly $2,000 a square foot. Hamilton is half of that. And the average rent in Hamilton is only $100 less than the average rent in Toronto. So you're paying literally half the price to get the same amount of rent. Makes zero sense. Like it's a no-brainer at the end of the day. And the vacancy rate in Hamilton is very low. Josh was saying there's a shortage of housing there. With 80,000 units coming, you guys got to get in on the first, because it's just going to keep skyrocketing as the years go by. So
yeah, Hamilton makes sense.
yeah.
So if you guys want to look at a different investment strategy, you guys can do that as well. Let's talk about this. Who wants to take over this one?
So we love our reviews. Any of our clients, we always get them to write a review. Sometimes we don't even ask; they just go up and write it. We treat our clients like family, right? We do what we would do. We take care of them. If I know something's going wrong, I can't sleep at night. Same with all the other guys, is because we're 24/7 on the clock, ready to help our clients and assist no matter what. So we got a lot of 5 stars on the screen. That's all we aim for, nothing less. And it's always great because our clients are always happy at the end of the day. And a success story is for both of us. You know, if they win, we win. Nobody loses together. We either lose together, we win together, but we don't lose on this team. So we just like to win with our clients, and thankfully everyone's very happy and satisfied with our services. So only up from here.
All right, now the much awaited Q&A question. Thank you guys for actually listening to the entire presentation. If you guys stuck on, hopefully you guys learned something about properties in terms of how to run numbers, what our thought processes are on where we're buying, what we're doing. Now we're going to be opening it up to our Q&A session. So if you guys have any questions you guys want to ask us, please, this will be the perfect time. We're going to do questions now. If you guys have any questions, for about 5 to 10 minutes. If you guys do have a camera, we would love for you guys to hop on the camera with us, as that would keep us more engaged. And let's have some fun.
So we have a question from Nathan. Nathan, you can
Hey,
put
Nathan.
your
What's
camera
going on,
on.
gentlemen? What's happening?
Not much. How you doing?
Good. I have a question. I want to get into probably a multifamily small unit, 4 units or less, probably next year.
Okay.
And I'm kind of stuck on the question of which direction do you go? Do you go the 20% down route? Do you go 5% down route and then save your capital for something else, right? Like I'll be in a position where if the mortgage rate that the mortgage amount that I would be able to be approved for would probably be around the 500 to 550,000, based on a couple of mortgage guys that I've spoken to. So the question, I guess, is like, what is the benefit of going 5% versus 20%? And I kind of think there's benefits on both ways, right? One, you're keeping more capital for the next move, and the other, there's obviously the benefit of no CMHC, and then less interest payment too, right? So,
Great question. I think you actually, I can already tell, are a very good critical thinker, because you're thinking about things a lot of people don't think about. Because CMHC, when it gets involved, you do have to pay them to use your money. Maybe not upfront, but when you sell the property, you got to pay them, right? Because you're borrowing money from their program. But what you're going to pay them in terms of what you're going to make on the property is so insignificant. So what I would do if I was in your situation, so first thing I would do is assess your situation in terms of how much money you have. You said the approval that you've spoken to is about 450 to 500,000. So you have a really good range of what you can buy in that range right now in this market, especially. Last year, I would say your hands are tied. You can only buy a single family, maybe a really bad duplex. Right now, you can get amazing duplexes for that price, maybe even a triplex. Right now, we have a 4-unit building that we can even get you for $530,000. It's an off-market deal, 4 units for 530 grand. That one's going to be sold, I think, in a day or two, because you just can't find numbers like that. But what I would do if I was in your situation is I would do 5% out on my first property and get as many units as I can possibly buy. Because the power of redeployment of that capital on your next property is going to be so much more significant for you in terms of the growth of your portfolio. And I think that's what you got to focus on. How old are you right now?
22.
22. So you're really young. Congratulations, man. The fact that you even think about investing into properties, like I started my first real estate property at 23 years of age, right? So for me to build a portfolio, if I can do it, you can do it 10 times more, right? So
Yeah,
that's the
man.
whole, no worries. That's the whole philosophy, and the whole, just be aggressive and try to maximize how many units you can get with the most amount of debt at your age, because that debt, as long as it's paying for itself, it's good debt. So use 5% down, buy your first property. After you buy the first property, make sure that even with 5% down, like the property that Abudi was talking about, that makes a lot of sense. It's still cash flowing at 5% down. Hard to find. Buy that one, let it sit it, forget it. That's it. As long as it services its own debt, you're not paying out of your pocket. You just put the down payment and your money's working for you. And then right away, take your down payment, the remainder funds that you have and go buy another one.
Yeah.
And buy another
Okay.
duplex. Now you got four units automatically. And with that other property, you're going to 20% down on it, or you can wait 3 to 6 months and declare that as your primary residence as well, and maybe do another 5% play.